Hello and welcome to another update video on Doge. The Doge chart has moved up in a very messy, chaotic ways from the 2022 lows. I mean, we're here on the daily chart. You can see we are pushing higher. However, as you can see, the market has just followed very much overlapping and messy structures, or built very messy structures. Overlapping structures are typically considered corrective structures. So the risk is that a substantial top has already formed. However, now as we are in support, the risk is fairly low because we have very clearly defined levels and areas to watch. And as long as the market is holding within this support area between 12.6 cents and 21.1 cents, I mean, important is we don't break and sustain below the 61.8 retracement. As long as we're holding above that level, the overall the potential is still for higher prices, right? In this fifth wave, which could take us even into all-time high territory. Important is that in this scenario, the market should start to turn to the upside soon, quite shortly. But we have not broken, and you can see it here on this daily chart better than on the smaller time frame. We have not really broken above any key levels, and honestly, this is only a three-wave move up so far, as you can probably see. So whatever it's doing right now actually does look exactly like this move up after the March lows to the upside, which was also just it basically ended as a three-wave move up and failed again. And I know people are always annoyed when I say I need to see five waves, but honestly, it just with all these three-wave movements, corrective rallies that happened before, I mean, it should be clear why we need to see the five waves for a first indication, really, that a low is in, because without the five waves, it can easily break down completely, right? And with only a three-wave move up, there is no evidence that an uptrend has started. It's basically just seen as a counter trend move to the upside if the market goes higher, right? And it's only moving up in three waves. It's no ever, we don't have a series of higher highs and higher lows. That's the main problem. So we wait for a five-wave move up, and the next milestone for the bulls would be a break above this swing high from end of March that formed around 20.5, 20.6 cents. And then the market can move higher. I mean, because the move up is likely going to be an ABC structure, we do not necessarily need to see five waves up. It can also work with a combination of corrective three-wave rallies. But obviously, there is no detail here on the daily chart. This just shows you the general roadmap. Should the market hold above the April low, this is how it should proceed in three waves to the upside. But I'd say we take a look at the shorter time frame now for Doge, and here you can see everything in a little bit more detail. And you might actually see that we have only formed three waves up. Now, one more high, in my view, would be enough for a weak diagonal pattern. The price has already formed what I consider a three-wave move up in a diagonal pattern. So we have a wave 1, we have a wave 2, then A, B, C. That C wave was clearly in five waves, 1, 2, 3, 4, 5. That's what it needs to be. It reached that blue target zone, and now we could indeed be in a fourth wave correction. The support area for that fourth wave is defined between 15.5 cents and 16.8 cents. How do we measure that? Well, it's typically measured against the length of the third wave. So we take the Fibonacci retracement tool, start to measure at the low of the 9th of April low, the wave 2 low, measure the distance of the third wave, and then the fourth wave support is normally defined here between, as I said, the 38.2 retracement and the 61.8 retracement, 16.8 cents to 15.5 cents. I shared with you yesterday, I think it was 24 hours ago or so, in the video that we've likely started the fourth wave. Since then, it dropped a little bit further. There's no evidence the fifth wave has started. The fourth wave is, it might go a little lower, but, the wave 2 was sharp. So the wave 4 is likely going to be a bit of a sideways correction. It is moving down in corrective patterns. It's kind of slow, choppy. So it doesn't have to go much lower. I've highlighted here two possible pathways for that ABC structure. One is this one in yellow. A wave down, done. B wave up, done. We could now be in a C wave down. That's one pathway, potentially to around about 16.8 cents or so. The other part, the direct path, right? In this case, the B wave high should stay intact at 18.3 cents. A bit more of a complex pathway would be A wave down, and then we're basically somehow in this B wave up, and would then go down in the C wave. So A, B, C. That means it could just form another leg up before we go down. It wouldn't change much. It might just mean that we form a little bit of a B wave extension. I can provide resistance for that in case it happens. So you have something to watch for. And that would be the standard resistance area here, between 18.3 cents and 18.8 cents before we then go down further in a larger degree, fourth wave, before we start the fifth wave. In other words, any break above 18.8 cents could indicate that we've started that fifth wave up to 20.6 cents plus. And then we'll have 5 waves, and then this would be a solid diagonal pattern, and then the subsequent pullback should be a higher low. We will then add support for that one when it is appropriate. That's the update on Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.